Last month, Lewisville had a surge of new listings, the most since 2021. And the question everyone keeps asking me is, what happened to all of them? The answer tells you everything you need to know about the Lewisville market right now, so stick around. I'm Michaela Wall, owner of the W Group Real Estate and Lewisville's #1 real estate agent. Every month, I sit down, break down the housing market numbers for Lewisville. No guesswork, just the data and what it actually means for you. This month's June update has a lot to unpack, and if you've been following along, you know last month was a big one for new inventory. So this month, we're going to pick up right where we left off and see how the market responded. Now, you may have already seen my postcard in your mailbox, but if you haven't or you want a full list of every home sold in Lewisville this month, there's a link down below. All right, let's start with what's coming onto the market and what's actually selling. In May, we saw 26 new listings hit the market in Lewisville. That's up from 21 in May of last year, about a 24% increase. But here's the context that matters. The 20s is right in the historically normal range for May, but way less from the 40 in April. So we're not seeing a continued flood of new inventory. We're seeing a healthy, normal spring market. Now, closed sales. In May of 2026, 25 homes closed. Compare that to 13 closings in May of 2025. I know, that looks like the market doubled, and I want to give you the honest context. May of last year was abnormally slow. We saw significantly fewer closings than a typical May, so the year-over-year comparison is quite exaggerated. The real story: 25 closings puts us near the high end of what we've seen for a May in recent years. That's a genuinely strong month, not just a statistical bounce off a weak comparison point. And here's the forward-looking piece I want you to file away. With so many homes going under contract in May, we could be looking at a record number of closings in June. We'll track that next month. So following up on April, what happened to those 40 new listings? So back to that question we opened with. Last month, 40 homes hit the Lewisville market in April. That was a lot of inventory. A lot of you wanted to know, how did the market absorb that, or did all the inventory just sit? You actually might be surprised, but 30 homes went under contract. That's a 75% absorption rate on a historically high listing month. Think about what that tells you. There's real, active buyer demand in Lewisville right now. The market didn't flinch. Now, we didn't see an absorption of all 40, and that's actually part of why our month's supply ticked up just a bit, which I'll get to in a minute. But the fact that 30 went under contract is a meaningful signal of market health. Okay, let's talk about price. And I want to spend a little extra time here because the two numbers on this slide tell a very different story, and both of them need some context. First number, the rolling 90-day median sales price is $403,000. The previous rolling 90-day period came in at $389,000. So that's an increase of about $14,000 or roughly 3.6%. That looks like solid appreciation, but here's the honest interpretation. We had several new luxury, new construction closings in May. In fact, there were 3 new builds that closed just in Woodview Estates. When higher priced homes close in a given month, they pull the median upward. Not because your neighborhood's appreciating at 3.6%, but because of the mix of what's sold has changed. Now the second number, and this one might catch you off guard. The rolling 12-month median comes in at $425,000 for May of 2026. A year ago, that same rolling 12-month number was $479,500. That's a $54,500 drop year over year. And I want to be really clear what's behind that number because it's the same story, but it's actually just in reverse. A year ago, we had a notable number of luxury closings flowing through the 12-month window. As an example, in March of last year, 6 out of 24 homes closed well above $1 million in a single month. That pushed the rolling median way higher. Now, as those transactions have rolled off and been replaced by a more typical mix of resales, the median's coming back to a level that is more accurately reflecting the broader market. This is not a signal of broad depreciation. Your home has not lost 11% of its value, and it's a mix shift in what's closing. And understanding that distinction is the difference between making good decisions and making decisions based on a misread of the data. Now, here's where it gets interesting. And honestly, this is the number I think that tells the clearest story about where buyer demand actually stands right now. The rolling 90-day median days on market is 27. Just 30 days ago at the end of April, that number was 41. That's a 34% drop in days on market in just 1 month. Homes are moving significantly faster. Now, earlier this year, we did see a spike in days on market, and if you've been watching these updates, you remember we talked about economic uncertainty creating some hesitation in the market. Buyers were pausing. Things were sitting a little bit longer, and that's what drove that 41-day number up. What May is telling us is that hesitation has faded. Buyers are moving again. When you compare May 2026's 27 days to May 2025's 25 days, we're essentially right in line with where we were a year ago, which was a competitive, healthy market. The takeaway: well-priced, properly prepared, and correctly marketed homes are still moving fast. The window for sellers who have done the work is open right now. Okay, so the last metric, months of supply. And this one rounds out the picture nicely for us. Looking at just May alone, we had 3.5 months of supply compared to 2.6 months in May of last year. That's a meaningful shift year over year, and it connects directly back to what we talked about with April's inventory surge. When 10 of those 40 April listings didn't get absorbed, they carried over and added to May's supply count, which is a big part of why that number moved. Now, let's look at the rolling 90-day picture, which smooths out some of that monthly noise. The current rolling 90-day months of supply is 3.2, up from 2.9 the previous period, about a 10% increase. Either way you look at it, 3.2 to 3.5 is still a seller's market. A truly balanced market sits around 5 to 6 months. We're still well below that. But the direction is worth watching. We've gone from 2.6 to 3.5 in just the past year. That's a gradual drift towards balance, not a swing, not a crash, just a slow rebalancing that's giving buyers a little bit more breathing room than they had 12 months ago. So let's pull all of this together and talk about what it means for you, whether you're thinking about selling or thinking about buying. For homeowners and potential sellers, the market's still in your corner, but it's not forgiving of mistakes. Well-priced, properly prepared, and correctly marketed homes are still moving fast. We just watched 30 homes go under contract in a single month off a historically high listing volume. That's not a slow market. What it is a more discerning market. The homes that are sitting longer are the ones that are overpriced, underprepared, or poorly presented. If you're thinking about selling and you want to be in the category that moves fast, the work you put in before you list matters more now than it did 2 years ago. For buyers, you have more choices than you've had in quite a while. Inventory is up, months of supply have increased meaningfully year over year, and that's genuinely good news for buyers. You have more options and you have a little bit more time to make decisions than you did in the frenzied market of a couple of years ago. That said, don't walk in expecting to steal a properly priced home. We're still seeing multiple offers on well-positioned listings, with selling over list not being uncommon. We aren't seeing sellers feeling pressure to accept below-market offers. What the market is doing is offering you more selection and a little bit more breathing room, and that's meaningful. So here's the one-sentence takeaway for May. Lewisville is still a healthy, competitive market showing early signs of rebalancing. Buyer demand is real, homes are moving fast, and the direction of inventory is worth watching. I've got plenty of resources linked below, whether you're thinking of buying or selling. And as always, if you want to know what any of these specific numbers mean for your home and your specific situation, reach out to me. I'm always happy to have that conversation personally. I'm Michaela Wall with the W Group Real Estate, and I will see you next month.